Only 10% of Bitcoin is left. Are you too late? Bitcoin's price is climbing, but what if I told you the real story isn't the price at all? Because right now, something much bigger is happening. Bitcoin's supply isn't just decreasing, it's collapsing. And it's happening a lot faster than you think. Sounds wild, right? Sure, everyone is still talking about Bitcoin breaking through 111k, the all-time high. Wow! Mainstream media says, the bulls are back, it's ETF hype, Trump's tariffs shook the markets. Yeah, right, maybe. But that's not the full picture. Because here is the truth nobody is telling you. Bitcoin isn't just going up, it's disappearing. Quietly, systematically, being locked away by corporations, ETFs and governments, permanently, one wallet at a time, $1 billion purchase at a time, until there is nothing left for you and me. By the way, I'm Neil, and what you're about to hear isn't price speculation. It's an urgent breakdown on how the supply shock is already here, and why that changes everything. Let's get into it. So, how does all of this show up in the charts? Let us get into the data and see what's actually happening on the battlefield of price. Because the heatmap, it's lighting up. And the CVD, it's telling a story of big money moving and smaller players reacting. Let's break it down. Over the past 24 hours, Bitcoin started around 107.4k and moved sideways for a while. It stayed stuck between two major liquidation zones, with short liquidations sitting above at 110k and 108.2k, and long liquidations below at 107k and 106.5k. After trading sideways for some time, the price dropped down to around 106.5k, but buyers stepped in quickly and the price bounced back. At this point, we could see the liquidation zones getting thicker, meaning more traders were placing leveraged positions. On the heatmap, this shows up as bold yellow lines at 106k, 106.5k for long liquidations, and at 108k, 109k for short liquidations. Then, the price suddenly jumped and pushed right through the 108k, 109k short liquidation zone. It wasn't a smooth breakout, but it kept moving up and is now sitting around 109.5k, testing another big resistance zone filled with short positions. So, here we are. Resistance zones, where sellers might step in. Looking at the upper part of the heatmap, we can see thick teal and green bears, which show where lots of short positions are stacked. These are areas where sell pressures could show up. The biggest resistance is around 110k to 110.2k. If the price pushes into this area, it could trigger a wave of short liquidations, and that might cause a short squeeze, sending the price even higher. Above that, there are lighter resistance bands going up to around 112k. These are smaller clusters of shorts, but they could still slow down the move. Support zones where buyers might step in. On the lower side of the chart, we can see bright yellow and green areas showing where long positions could get liquidated. These are likely support zones. The nearest support is around 108k to 107.7k, and this is the zone that already held once during the recent dip. If that level doesn't hold, the next key support is a bit lower, between 106.4k and 105.8k. This zone has a lot of long liquidations, so we'd expect buyers to show up again there. Conclusion. Right now, Bitcoin is trying to break through the 109.5k to 110k resistance area. If it succeeds, we could see a short squeeze that takes us closer to 112k. But if the move gets rejected, we will be watching the support zone at 108k and then down at 106.4k to 105.8k to see if buyers step in again. The heatmap shows us exactly where the liquidity is stacked, and that helps us figure out where the next big move might happen. And now, to make good measure, let's take a look at the CVD and see what the whales are doing. Currently, there is no clear sell wall at 110k on the fire chart, and a sell wall is forming above 112k. If you look at the overall movement of whales, starting with the brown line, which represents large orders ranging from 1 million to 10 million in US dollar, we can see that whales were steadily accumulating earlier. alongside the green and purple lines representing 1,000 to 10,000 and 100,000 to 1 million in orders. They were also buying consistently during the same period. However, since around May 23rd, all three groups have started to reduce their positions. This likely means they are taking profits or pulling back exposure as the market gets closer to key resistance zones. It's a classic sign that smart money is becoming more cautious. At the time, smaller traders, I mean the red and orange lines for 1,000 to 10,000 and 100 to 1,000 orders respectively, they are showing even stronger selling pressure, dominating the overall trading volume. Their reaction points to retail fear or short-term panic, especially during recent market dips. And let us not forget the blue line, showing the total order volume. Right now, we are seeing this line drop sharply, almost vertically, which is a clear signal that overall market participation is falling. In short, larger players were early to buy and are now exiting gradually, while retail investors are selling more aggressively, a typical behavior pattern during market transitions. In my opinion, I think we are likely entering a zone of hesitation, a kind of cooling off period where the market is trying to figure out its next move. So, short term, we are watching resistance, liquidations and whale behavior. But zoom out and you will see something far more powerful. This isn't just about charts and indicators, it's about who's buying, why they are buying, and how much is left. Because if you think the price action is intense now, wait until you see what happens when supply actually runs out. Let us talk about Bitcoin's built-in scarcity and why institutions are racing ahead of retail. Bitcoin was designed to reduce supply over time. Every 4 years, it goes through something called a halving. The mining reward gets cut in half. This means fewer new Bitcoins enter the market over time, which naturally creates upward pressure on price. Right now, about 900 Bitcoins are mined every day. That's around 328,000 a year. But by 2028, that number will drop below half. Enter MicroStrategy. This is where MicroStrategy, or strategy as we know it now, comes in. I know I keep mentioning them over and over, but to understand where they come from is crucial to understanding the state of Bitcoin. So, MicroStrategy was originally an IT consulting firm. Its founder, Michael Saylor, changed everything with one bold decision. We are putting Bitcoin, not dollars, in our corporate treasury. Since then, the company has become a Bitcoin buying machine. In the last 6 months alone, MicroStrategy now holds over 568,000 Bitcoins. 20% of their holding was bought in 2024. Their holdings are well over 3 times the annual mining supply post-halving. So, what does that tell us? Before supply even shrinks, demand is already outpacing it. And the craziest part? This is just one company. And for the bigger picture, now add BlackRock, Fidelity, Invesco, VanEck, ARK, over 30 ETFs worldwide, sovereign wealth funds, family offices, billionaires, even government agencies. They are all buying, and they are all saying the same thing. We are not selling. They are not here to flip Bitcoin. They are holding it, using it as a collateral, and building the future of finance on top of it. So, the question we should all be asking is, what kind of future do they see coming? We need to look beyond price and toward a new system. This isn't about short-term gains. This is about a long-term bet that the global money system will change. And Bitcoin? They see it not just as an investment, but as the base layer of a new financial system. And who's buying? Global ETFs, sovereign wealth funds, major banks, billionaires, central banks from dozens of countries. For the demand and the supply, 450 Bitcoins are mined daily. But ETFs are buying 3 to 8 times that amount every day. It's like a bakery producing 450 loaves of bread a day, but 3,000 people are lining up to buy. Where's the Bitcoin going? It's disappearing from exchanges. At one point, more precisely on May 9th, around 1 billion worth of Bitcoin was withdrawn from Coinbase in a single day. Another 370 million left the market just recently. And this isn't just movement, it's cold storage. Bitcoin being locked away and taken off the markets. That means less Bitcoin is available to buy, trade or borrow. This isn't just a bull run. This isn't just a price rally. It's a structural takeover. Bitcoin is moving into institutional hands and not coming back out. If billions of dollars are flowing into an asset that isn't being sold, what do you think happens next? The Bitcoin banking era. These buyers aren't thinking about 100k or even 500k. They see Bitcoin as digital collateral, not just digital gold. They are building a system where Bitcoin becomes the foundation for lending, credit, and banking. Let's say Bitcoin hits 1 million USD. It's a forecast already made by ARK, Fidelity, and Cathie Wood. 1 Bitcoin equal $1 million. You can earn 5% annual interest, which makes for $50,000 a year. 10 Bitcoin? That's $500,000 in passive income. 1,000 Bitcoin? That's 50 million USD a year. And in interest alone. Sounds futuristic? It's already happening. DeFi platforms like AAV or Maker DAO and Compound, they already offer Bitcoin-backed loans. And now Wall Street is catching up. BlackRock, Fidelity, JP Morgan, all building products around Bitcoin. The assets they are never planned to sell. They are not flipping Bitcoin. They are using it to build. Their message is clear. We will never sell. We will grow our holdings. This is the foundation of a new monetary system. So, where are the retail investors? Here is the sad truth. While companies, institutions, billionaires, and even governments are buying, most individual investors are staying away. And why? Price is too high. I will wait for a dip. There's no way it hits 1 million, right? Does it sound familiar? People said the same in 2012 at $10, in 2016 at $600, in 2020 at $10,000, and now in 2024, 25, the cycle repeats. But why do institutions win? Why does this keep happening? Because institutions understand structure, not emotion. They don't buy because it's going up. They buy because they understand why it must go up. Retail investors? They react to news. They buy from fear. They sell from panic. And they usually buy last and sell first. Let's be blunt. This is no longer a game of price predictions. It's a global asset acquisition war, and 90% of the supply is already gone. So, who owns Bitcoin now? Corporations? ETF giants? Sovereign wealth funds? Billionaires in cold wallets? And every one of them is saying, we are not selling, we are buying more. Only 10% of the supply remains liquid. And who is fighting over that? Millions of retail investors, global pension funds, emerging market central banks, major corporations building Bitcoin-based payments. Everyone is now competing for what little is left. So, where do you stand? Stocks are good, gold is fine, bonds are okay, but Bitcoin is now at the center of the biggest financial shift in modern history. Whether you believe it or not, the world's biggest players are moving in. The machine is already running, and even if you do nothing, it will keep going. This is no longer about guessing if the price will rise. It's about deciding if even a small part of your wealth should ride this wave. Thanks for staying till the end. I truly hope this video didn't just give you news, but helped shift your mindset and long-term view on wealth. Make sure to like, subscribe, and drop your thoughts in the comments. Because, remember, even the biggest bull runs mean nothing to those who never take action, but for those prepared. This moment could be life-changing. We are just getting started. Thank you for today. That was Neil, and as always, stay sharp, stay informed, and I will see you in the next video, where we go even deeper and grow even higher together.